This morning, we have Wei Li, China economist at Standard Chartered Bank, joining us from our Shanghai studios. Wei, good to see you. What about the Chinese currency? You have Larry Summers in town, so of course the currency moves just a bit to, some would say, to appease U.S. forces. But how strong do you think the RMB is going to get this year?
Well, to be honest, we always believe that the appreciation is going to be a very gradual one. And we think it's likely the US dollar CNY will touch somewhere between 6.7 to 6.73 by the year end. And our view has been that the Chinese government will and needs to focus more on the currency basket rather than just the bilateral US dollar against the CNY. And I think China needs to reduce its actual imbalance, and the best way to do that is to start to appreciation against the nominal effective exchange basket, and the US dollar and the CNY is more of a political issue for the moment, I guess, to the market. But as an economist, I would strongly suggest that people start to shift their attentions to the basket of currency.
Okay, and how is the Chinese economy doing these days, Wei Li? You know, we have those trade figures coming out this week, and then last week we had those PMI numbers, manufacturing figures coming in better than expected. So what about this engineered slowdown? Have the authorities done a good job here?
Well, to be honest, I think China's economy was experiencing a very healthy process of slowing. Between April and July, and I think some tentative signs since August suggest that the economy seems to appear to have been stabilizing. And especially if you look at the car sales, the new home sales, it seems to have there seems to be some uptake happened in August. So to be honest, I think China's economy is doing fairly well for the moment.
Okay, quickly, Wei Li, let's talk about those consumer prices. You know, we have the Chinese government, saying they have a 3% target to try to contain inflation. Right now, that last check, the CPI number is coming in way above board. Well, not way above board, but over that 3% target. So what does that mean for, I guess, inflation rises in the future? Is that a threat to Chinese growth?
I think for August, the CPI might rise marginally above the July's number, coming between 3.3 or 3 to 3.5% year-on-year. But the real question is whether this rise in this inflation will last. And in our view, that this is going to be a short-lived inflation, and the government, and especially if you look at the PPI, which is the underlying upstream inflation pressures for the non-food CPI, and it's already coming down. And most of the recent rise in the CPI is caused by in my view, is by the temporary distorting effect of the flooding, bad weathers. And I think the government will not react too much to this temporary inflation rise.
Okay. All right, Wei Li, nice talking to you. Thanks for that, Wei Li of Standard Chartered.